Silver just crashed 5%, but here's the twist. That's not the real story. This wasn't just a dip in price. No, it was a calculated, deliberate move designed to hide something much bigger. While the price was hammered down, something astonishing was happening halfway across the world. In Shanghai, silver was trading at $13 more per ounce. Yes, you heard that right, $13 more. And this isn't just a coincidence. This is the widest gap in modern history. So why would someone in New York crash silver's price when the rest of the world is willing to pay a premium? It's not just market volatility at play here. This is about a battle that's already being fought, and it has massive consequences for anyone holding silver. Keep watching, because what's coming next is going to change the way you view silver forever. Here's where it gets even crazier. This 5% crash, it wasn't an accident. It happened during the quietest part of the trading day, the overnight window. And if you've never heard of the empty hours, let me break it down for you. This is the time when liquidity is at its thinnest. There are fewer buyers, fewer sellers, and practically no one to absorb the pressure when a big player decides to make a move. It's the perfect time to manipulate the price, and that's exactly what happened. Someone dumped 2,000 silver futures contracts, 200,000 ounces of paper silver into the market all at once. But here's the kicker. While New York's price was getting crushed, the price in Shanghai was rising. That $13 gap wasn't just an anomaly, it was the signal of a deeper problem. And what does it mean for you? It means the paper price in New York no longer reflects the real value of silver. In fact, it's telling you everything you need to know about how much control is slipping away from the West. But here's the big question. Why would they do this? Why dump so much silver, risking it all? Stick with me, because the answer is something that could shake the entire system. Now, let's talk about why this matters. While silver was getting hammered on the Comex, something crucial was unfolding in Shanghai. The gap between the price of silver there and in New York reached $13. That's not just a small difference, it's massive. In a normal market, this gap should have been closed almost immediately by arbitrage. Traders would buy up the cheaper silver in New York and ship it to Shanghai, profiting from the difference. Simple, right? But here's the shocking part. This isn't happening. The gap is staying wide. Why? Because the physical silver isn't available in the West to close it. There's no metal to send. It's all locked up in vaults, and these vaults are emptier than they've been in years. So when you see silver trading at $87 on paper, but $100 in the real world, you need to ask yourself, what's the price really telling you? It's telling you the paper market is broken, the metal's not there, and no one is willing to sell at that price anymore. And this isn't just a glitch, it's the beginning of a breakdown. Keep watching, because this market is about to reveal more than you think. So what does all this mean for the bigger picture? Well, this isn't just a one-time fluke. We're seeing something that's been building for years. Back in 2008, we saw a similar pattern in gold, an emergency intervention by central banks to prop up a system that was about to break. But this time, it's silver. And it's not just a minor market correction. What we're witnessing is the beginning of a massive disruption, a pushback by the big players in the financial system trying to keep silver's price under control at all costs. It's the normalization of something that shouldn't be normal, a manipulated market. What's happening now should send shockwaves across the commodities world. The gap between paper prices and real-world prices is widening, and it's a sign that we're on the brink of something major. If the price disparity keeps growing, it'll become impossible to ignore. And once the cracks in the system are too big to patch up, this whole market could flip on its head. Now let's get into the real shocker. This isn't just about price manipulation, it's about the cracks in the system becoming undeniable. Last night's dump wasn't just a casual sell-off, it was a targeted strike designed to keep the price under control, and the evidence is clear. As silver got slammed on the Comex, physical silver in Shanghai was still commanding a $13 premium. This isn't just about making money on paper, it's a battle for physical supply. And here's the kicker. As the Western markets dump silver to suppress the price, they're actually driving the metal straight into the hands of Eastern buyers. What's happening is a slow-motion disaster for the big banks. They're short on silver. They need to deliver physical metal, but the metal just isn't there at the price they need. So they're dumping contracts, hoping to drive the price down and scare people away from demanding physical delivery. But here's the problem. Every ounce that leaves the West at $87 is gone. It's not coming back. And with each ounce that disappears, The squeeze on the paper market tightens. The question is, how long can they keep this up before the whole thing unravels? The pressure is building, and it's not just a slow burn anymore. In the last 24 hours, we've seen three key developments that should have you on edge. First, the Shanghai premium remains stubbornly wide. That 13 spread isn't shrinking. Second, the backwardation in silver is screaming at us. Immediate delivery is in high demand, and that market isn't going to wait. Third, the options expiration is looming this Friday, and the banks are sweating. They're sitting on massive short positions in silver futures, and every minute that passes, the odds of a gamma squeeze grow. What happens when this pressure cooker finally blows? If silver breaks past the $80 mark on SLV, the hedging demand could push the price higher, creating a massive feedback loop that pushes the price into overdrive. It would be chaotic, volatile, and could reshape the silver market in a matter of days. But the other path is just as dangerous. If the banks manage to keep the price below key levels, they could delay the squeeze, but only for a short time. The underlying problem won't go away. The physical shortage will persist. And if that pressure continues to build, the eventual explosion could be even more devastating. The market will break one way or another, and the only question is, when? Right now, we're watching a market on the edge, teetering between these two possibilities. Either way, things are escalating, and the next move is already in motion. Now, let's take a step back. What does this all mean for you? For the average person holding silver or looking to buy, the pressure isn't just in the charts, it's in the real world. If you're stacking physical silver, you're already feeling the effects of this market breakdown. You're watching a real-world shortage unfold with premiums on physical silver in the East sky high, while the West keeps playing a dangerous game of paper promises. The fact is, when the physical supply runs dry, all the paper contracts in the world won't matter. You're holding an IOU, not silver. This is where things get personal. You need to ask yourself, do you trust the paper market, or do you trust what's happening in the physical world? The pressure to own actual metal is growing, and every ounce that disappears into private hands is a reminder that possession is king. If you're feeling uncertain about your holdings, you're not alone. But here's the thing, if you're feeling that squeeze, there's a reason, and it's because the system is crumbling, and soon enough, everyone else will catch on. Now, let's pull back the curtain and look at the system that's allowing this to happen. The game the big players are playing is built on leverage, fear, and a whole lot of smoke and mirrors. Here's the unsettling truth. The entire system is dependent on one thing, control. Control of the paper market, control of the narrative, and most importantly, control of the physical supply. The reason silver is being suppressed isn't because it's overvalued. It's because those in power can't afford for the price to break free. If silver goes higher, it could trigger a massive shift in the global financial system. The entire game is based on keeping the price in check, manipulating the market through paper contracts, and making sure that the physical metal stays out of the hands of those who would expose the lie. But as more people catch on, as more buyers demand physical delivery, that system becomes harder to control. The truth is, the more they push back, the more they're accelerating the collapse. They're stuck in a losing game where the only way out is to maintain the illusion. But here's what they're not telling you. This illusion is already cracking, and when it breaks, the whole system will fall apart. Here's where it gets uncertain, because right now we're standing at a crossroads. There are two paths ahead, and both are filled with explosive potential. First, if silver continues its upward trajectory and breaks through critical levels like $80 on SLV, the market could enter a gamma squeeze. It could trigger massive buying pressure as the banks scramble to cover their shorts, creating a feedback loop that pushes the price into overdrive. It would be chaotic, volatile, and could reshape the silver market in a matter of days. But the other path is just as dangerous. If the banks manage to keep the price below key levels, they could delay the squeeze, but only for a short time. The underlying problem won't go away. The physical shortage will persist. And if that pressure continues to build, the eventual explosion could be even more devastating. The market will break one way or another, and the only question is, when? Right now, we're watching a market on the edge, teetering between these two possibilities. Either way, things are escalating, and the next move is already in motion. So what's the takeaway from all of this? The truth is, the silver market is at a tipping point, and it's one that could change everything. The paper price in New York is a decoy. The real price is what's happening in the physical market, and right now, the physical market is telling us that silver is in short supply. The $13 premium in Shanghai, it's not just a statistic, it's a warning. The backwardation It's the final signal that the system is losing control. Every day that passes, the gap between the paper market and reality widens. The pressure is building, and when it finally bursts, the price of silver could be far higher than anyone expects. The real question is, are you prepared for that moment? If you've been following the game, you already know what comes next. But if you haven't, this is your chance to take action. Stay informed, stay prepared, and hold your ground. The system is changing, and when it does, you'll want to be on the right side of it. For now, watch the physical, ignore the noise, and stay tuned for more updates. The story is just getting started.